Welcome to the Data in the AI Era podcast. I'm Peter Finter, and in this series, I sit down with data leaders from the financial services industry to explore how they unlock the full potential of their data amidst the challenges and opportunities of the AI era. Thriving in this rapidly evolving world demands precise decision making and relentless innovation. It's what we call survival of the fastest. And here's the challenge: the hype is loud and the results aren't always clear. In fact, a McKinsey report recently found that only 6% of businesses are seeing meaningful returns on their AI investments. What sets that 6% apart? Where should we focus AI efforts for maximum impact? And how do we successfully fold it into such a highly regulated and high stakes industry? Well, I am delighted to be joined today by Time Magazine technology pioneer Mark Palmer as we explore how capital markets can harness practical AI and generative AI applications to drive real value right now. Mark, welcome. Thank you so much for joining us today. I happen to know that you started working in the electronic trading space before the markets were even digitized. I won't give away any more than that. How did you start out working on capital markets applications, and why did you become so passionate about technology on Wall Street?
Yeah, well, there was a day when people threw pieces of paper onto the floor and then runners picked them up, and that was the dawn of the front, middle, back office, right? But that wasn't so long ago for most people listening, probably were at least alive at that time. Things started to digitize really the kind of the late 80s, early 90s. I got my first job out of college working on a trading floor, building a custom multicast middleware system. So it was at the time when all of a sudden stock prices were available networks and you could grab them and then send out through middleware the price once. And there were football sized trading floors of humans watching these prices fly across their screens. Well, that's what we built at the early days. That was the dawn, I guess, of electronic trading. So I just thought it was so cool. I mean, I've done a lot of sports in my life. Being on a trading floor is very, it's a high stakes, high speed, real time game, and it's only gotten more interesting over the last 30 years.
Let's talk a little bit about that. I mean, first of all, yeah, could there be a more competitive environment than on a trading floor? I think not. And of course, that trading floor is now distributed and digitized and high frequency and lots of challenges, lots of opportunities for data and technology innovation in capital markets today. But how do you see the current landscape shaping up?
Yeah, so it's in a way it's similar to the early 2000s when every magazine on Wall Street was the death of the trader because of algorithmic trading, right? Yet only 5% of the world's trading activity. You set this conversation up saying, hey, the top 6% are really using AI effectively. Only the 6%. Well, only 5% were doing electronic trading around circa 2002, at least in the equities market. So it feels a lot like that. And it also feels like the sort of the death of the human on trading floors was largely exaggerated then as it is now, right? If you listen to people saying, oh, well, AI is going to do this, that, and the other thing. 30 years later, of course, humans are just as important, if not more, than they ever were. So I see a lot of parallels there. A lot of well, AI is going to solve everything, especially on Wall Street. People are really skeptical about that. We've seen the movie, or at least we've seen the headlines for the movie before, and it really never has come around. So, but that said, I also see it as an amazing transformative time as well for different kinds of applications.
Well, give us some examples, because today we're starting to see a lot of experimentation. Generative AI is starting to make an impact. As you pointed out, a relatively small number of organizations seem to be able to take advantage of that to drive more than productivity applications today. But we all understand applying new technologies in Wall Street is highly desired, but also fraught with difficulty. A very high stakes environment, lots of risk that needs to be managed through. So I'm wondering, Mark, from your point of view, are firms today struggling more with cultural resistance than they have in the past? Is it to do with legacy systems? Is it the regulatory environment, or is it just the sheer complexity of data strategy, or something else? What do you see as the key hurdles that firms are facing when they're sort of considering adoption of generative AI today?
Well, I like to think of the rule of twos that is often talked about in places like Wall Street, right? The data moves too fast. There's too much of it, and the latency of decision making is too short. So therefore, a lot of technologies simply don't apply, and especially maybe the early phase of generative AI technologies are really not designed for that kind of environment. So a lot of traders just pull right out, straight out, reject it, simply because it's really not designed to be in the high frequency, mainstream. However, answer your question. So it was all right. So what's the barrier there? Well, the barrier is real on Wall Street, right? The barrier is like, no, I can't wait for even a few seconds for the answer, the generated answer in a lot of cases. So if you look at some of the technologies that are coming out of generative I love things that are augmenting the ability to make a better decision, not necessarily only faster. It's better to be a little bit slow and right than really fast and wrong. And what generative AI technologies let you do is really do assess overwhelming amount of information pretty quickly to make a smarter decision. And those are decisions that are also, to use the word of the technology, is generative, right? Like a lot of traders today are overcoming the barrier by using generative AI as a trading co-pilot, right? As an assistant that's really doing advanced brainstorming. I think as long as you can deal with the data very, very, very quickly.
Can you expand on that a little bit, Mark? What comes to mind when you think about that? What should we envision traders, portfolio managers, quants doing with generative AI that they can't do today without it?
Yeah, I like the analogy of looking at some of the work that's been done in legal tech, believe it or not. Now, bear with me for a second. Like a lot of people heard the story maybe almost a year ago of some lawyers that submitted a case with cases that didn't exist. They were using generative AI. Generative AI made up some legal briefs that they included in their brief, and the lawyer, I mean, they almost got disbarred over it, right? So a lot of people took that and said, "Oh my gosh, you can't use generative AI because of its hallucinations and its error proneness. You can't use it for where you have to make certain decisions." Well, startups started to emerge that actually did exactly that, but from a different perspective. The hallucinations could be a benefit, right? So I think of it as a great counterpuncher for traders to come up with novel strategies that they hadn't thought about, because of course most algorithmic traders or anybody in the trade flow loop have been doing this for a long time. They know most of the strategies. But when markets are very volatile, it's really helpful to use the algorithmic capabilities of generative AI, particularly some of the algorithms there, to come up with newer novel ideas that you might not have thought about or rejected, but often are very relevant. And it's a huge way of leveraging the capability of generative AI. And that's not putting it right in the trade flow, which is not very practical.
You're making me think there about kind of how we as human beings operate today and the difference between applying judgment and predicting outcomes or predicting futures. I think, most of us make decisions by thinking about potential consequences of a decision that we make and making the best choice of the alternatives that suggest themselves to us. And I think you raised two interesting points. One is that generative AI has the potential to open up the universe of ideas that we might consider, the potential trading strategies that might not naturally occur to us, perhaps because they're coming a little bit out of left field, a little bit provocative, perhaps, and maybe many of them might be discarded very easily. But on the other hand, they might expand the universe of possibilities. But also, this idea that generative AI is an augmentation to our human thinking and endeavor, and potentially can explore more of the predictions for us faster, which gives us focus around the judgment. Do you think about kind of how traders, quants today might need to think differently about this particular technology compared to perhaps some of the traditional technology, what we now call traditional AI technologies that they've adopted in the past? What's different about adopting generative AI from adopting, let's say, machine learning for building algorithms?
Well, first of all, is the obvious one, which is that it tends to work best or really is designed for unstructured data. That first job of mine was about processing very small ticks of market data with a set number of fields, highly structured, really fast moving. So the thing to think about is expanding the kinds of information that you actually use. Now, this isn't necessarily new either, but regulatory reports, social media flows, transcribed conversations with clients. I mean, there are other sources of unstructured data that when you mix it with structured data, that's one example. Another is I like to borrow from Mercedes. My one of my last companies, we sponsored the Formula One racing team, and the importance of simulation was really incredible. And I find that this is something that advanced trading groups are doing more now in conjunction with generative AI, because of course there are forms of generative AI that can synthesize or create scenarios and simulate millions of scenarios that the human might not have even thought of before. Again, sometimes using unstructured data. So literally, we worked on the analytics for Mercedes, and they would every race they would simulate, in some cases, millions of scenarios, what could happen with the weather. And of course, this is all going to change on the day, but simulating it ahead of time and training your system to have these plan A, B, C, D, E, F, and G is an example of using AI techniques, different kinds of data. So there you've got, we would use weather information quite a bit, sensors from cars, different types of information, but to pre-imagine scenarios for race time. And that is like a real direct comparison to trading.
Well, Mark, you're making me think about a previous guest who shared with us that in her business, one of the key benefits that she saw from using generative AI was the ability to speed up the rate of iteration of ideas. To your point, multiple scenarios are needed to anticipate potential movements in the markets. Although I always love that phrase, no plan survives contact with the enemy. I'm quite sure that traders feel exactly the same way about their strategies. But nevertheless, one of the keys is being able to simulate multiple strategies in order to be able to determine which ones will make the most sense. So that concept of backtesting, how that works. One of the interesting takeaways from our guest was that they were able to reduce the time taken to run a simulation from hours to minutes. In fact, she shared that they were able to run 100 times as many simulations in the same time window as they were previously able, as it so happens, after they implemented KX technology. And one of the benefits of that was that they were feeling much more equipped to be able to make smart choices about which strategies to implement. So this idea of acceleration comes to my mind. And I think, you have described AI as an accelerator of ideas. I love that concept. I wonder if you could just speak a little bit more to what that might mean in practice and how companies can harness that to create value.
So I think of two things when you talk about acceleration of ideas, right? If I continue on with talking about Formula One racing, because again, I think it's a little bit kind of cooler sometimes to talk about that than trading, and they're really related, right? But number one, you know, in Formula One, and of course, Wall Street doesn't have this restriction, but in Formula One, you are restricted to how much time you get in their full blown simulator, their physical simulator, right? It's so important. Simulation's so important that they literally give you a certain amount of time, or they're actually often changing it because it is such a competitive advantage. So, Wall Street, that's why we call it on Wall Street back testing. It's simulation, except there are new advances in simulation using generative technologies. So, this is about accelerating the rate of exploring edge cases in the context of what might happen on race day or trading day, right? Like if the sun comes out, all of a sudden all models start to change in Formula One. Same with the volatility on Wall Street. Of course, those are the most fun day for traders. Volatility is that's where the most opportunity tends to come. The other thing that about accelerating is that for a team like Mercedes, it's also restricted how many people you can bring to a race. They bring about 60 people to every race. That 60 staff. About half of those are analytics people, people looking at the data. So the notion that through prompt-based interfaces, through the new technologies that make it easier and faster for non-IT people to explore information is an accelerant because it multiplexes the thinking, right? You've got 60 people or 30 people going through and thinking about changes to strategy. Not everybody's looking at strategy. Some people are looking at just the tires, right, on a Formula One team. which is one of the most important decisions there. Same with trading strategies, right? Democratizing access to the simulations, to the data, to the predictions that are and their likely outcomes, looking at the edge cases. By democratizing that, you accelerate because you can get more people involved in the decision. So I think those accelerants, that's how I'm viewing the AI. Like when you say acceleration on Wall Street, that people start talking microseconds.
Yeah, here at KX, we like to talk about survival of the fastest, by which we mean the ability to make better decisions faster. To your point earlier, being the fastest isn't much good if it's not actually the right decision, but being able to make the right decision in the shortest possible time is clearly something that drives competitive advantage. So I think we're aligned in terms of that idea of accelerating ideas, the accelerating innovation that goes along with that. And along those lines, I'm very interested in who is responsible for driving innovation and what type of innovation are they responsible for driving within a capital markets firm. So you've touched on this idea of front, middle, and back office originating a long time ago now, but pretty well enshrined in terms of organizational constructs. And sometimes middle and back office might be more consolidated together with a thin front office. It can be more distributed depending on the size of the organization and so forth. But as you think about the impact of generative AI in particular and the role of the front, middle, and back office, how are you seeing that changing what we've been used to and the way that it's been set up to now? Do you see that it changing with the advent of generative AI, Mark, and in what kinds of ways?
Yeah, because look, simulation and predictive capabilities are all about, to me, finding the putting numbers or of likelihood on the edge cases, right? So, in a sense, that's what the middle office is supposed to do with risk management, with profit and loss calculations, right? Now, it's been long pursued to do that as quickly along in the trading flow as possible to make those smarter decisions, right? Understanding your P&L in real time is essential to making better trading decisions. So I think that's where current AI technologies fit in. Like, I'll give a great example, and it is one of my favorite technologies, and it comes from you guys. So this is not because we're on a KX conversation here. But what you're doing with stream similarity search is fascinating, right? At the heart of what generative AI is doing is it's making predictions the way our brains do through neural networks, right? And that's our way of making decisions in the human brain. And that's the magic of generative AI, right? The similarity search with vector databases and the algorithms that are all powering that. Well, you've taken that and applied to structured data. So this is a great example of something that probably most innovators hadn't thought of before. And it's coming from the vendors. So you ask who's responsible. I think all Wall Street firms are very good at partnering with innovative technology companies like KX, like the ones that I've been involved in over the years, digitizing Wall Street. So a lot of those ideas come from the vendors in partnership with the banks. And what I love, what I'm fascinated by now is that application of the generative AI technologies that are really mostly intended for other things that are being applied on Wall Street. Another great example of this that I've seen is agentic, agent. Everybody talk about agents, right? They're going to be autonomous, and we haven't talked about whether or not agents will replace traders, which I don't think they will. What they're also doing with agentic computing is helping deal with the data silos that many companies have. So, again, using technologies in a way that Wall Street firms, traders, front and middle office can use by breaking down data silos and barriers and processing more information faster. Those are also areas where technology is being used in a different way that it might have been intended, but Wall Street innovators are making it happen. So those are all examples of new tech that I've seen mostly from early stage companies like startups, but of course, Wall Street firms really love that kind of innovation if they can get an unfair advantage.
Always about getting the unfair advantage, that's for sure. In fact, I will reference again a conversation that we had on a prior podcast about where does innovation come from? And one of the interesting takeaways for me from the conversation was to recognize so often it comes from your own clients, whether those are internal clients or external clients, because the best ideas are born out of problems. Usually, it's like, this is an issue that I'm facing and I don't necessarily know how to address it. but it brings a tangible reality. One of the things that I've learned is that generative AI spawns many use cases. It doesn't seem to be difficult to think of a million ways that we could use generative AI in one form or another. The question is, how many of those actually make it through all the way into production? And the answer is very few, as we've seen already. Well, why is that? It seems to be partly because we sort of almost have a technology looking for a problem to solve instead of starting with the problem and working back to say, how can technology help me address that problem? And you gave a great example of temporal similarity search, which we offer in the form of a capability we call temporal IQ. And that idea of being able to see patterns in structured data using similarity search techniques with a view to then being able to forecast more accurately future scenarios based on patterns that have been observed, and to do that in real time. It's not just a question of going back and doing historical analysis, it's being able to feed that into real time data as it flows to be able to then drive better decisions and outcomes. So, this idea of kind of almost inverting the model and creating an opportunity for problems to be shared seems to be part of fostering an environment of innovation. And this particular guest of mine was sharing that they had a once in a week sort of office hours where people would bring potential use cases to bear and solicit the input from the team that was responsible for the data and AI solutioning. And it seemed to me that that was an effective way to break down barriers and just create that collaborative environment, which is likely to foster more innovation. And so often we get in the way of ourselves, don't we?
Yeah. No, no, no. You talk about survival of the fastest, and I think that has to do as well with the generation of ideas. How, because a lot of these, like agentic computing, the reason people love it so much, and also generative AI, is that it's lowered the barrier for non-programmers to be involved with the data. I mean, you got to think of the Mercedes team, right? They are not all programmers, but they can get access to the models, get access to simulations. And those weekly meetings, I spoke to on another podcast, the head of AI for ADP, I believe it was. And he said that they have an AI meeting every week. It started with 15 people in IT, and now it's over 1,500 people. And they're talking about use cases. And the conversations about use cases get people thinking about other use cases. And he said that it's gone from just sort of a lunch and learn session to actually a platform to generate business ideas. So I think it's really about, it's not about algorithms per se. It's about breaking down the barrier. I actually think that the prompt-based interface is one of the most fascinating things about AI. Not all of those cool stuff in the background, but the fact that I could just ask a question in my natural language and come up with a pretty darn good answer. The more you integrate enterprise data into that and give people access to it, and then facilitate those conversations, the faster you accelerate innovation, as you say, and survival the fastest. I love that.
Well, Mark, as we bring our podcast today toward a conclusion, I wonder if you might share any other thoughts on technologies that are emerging alongside of generative AI. We've talked about agentic computing, we've talked about temporal similarity search. Are there any other technologies that you see showing up that you think are going to be particularly transformative to help firms manage their data or make smarter decisions or just unlock new opportunities? Anything else that you would share with our listeners today?
Well, we talked about those things. We also talked about unstructured data. The obvious next piece to talk about there is our vector databases. I know you're doing work in that field and really but again, for Wall Street, it's vector databases that can deal with the kind of data that you have that's very unique on Wall Street, high speed, high frequency, high volume data, and then being able to, like you mentioned, with the temporal similarity search, applying that to unstructured data, but then also to be able to match that up with one environment, a unified environment for data that's unstructured. I think that's a really important set of technologies that aren't necessarily, most similarity search stuff is for better search, hence the word search. But Wall Street, what you're looking for is patterns in time of structured data, fluctuations, certain signatures, momentum movements, and more structured data. I think those are among the cooler things that I've seen. I mentioned agentic data engineering, really liking those ideas. And then in passing, I talked about conversational information. I think even today's biggest call centers, interactions with customers, they're still not using most of that data, even though it's pretty cheap and easy to transcribe language conversations between participants. And call centers is the obvious one, but on Wall Street it's with clients, it's with filings, documents, regulatory documents, all that information. It's so easy now to absorb that unstructured data. And I think the thing I see happening a lot is, that's why it's just 6%. It's still neglected to a large degree, the wisdom that's in those kind of documents and the ease at which you can get access to it.
Well, I think to that very good point, Mark, it can be a bit overwhelming. If you were starting out seeking to implement generative AI, there's plenty of opportunity, but there's also plenty of ways to go awry out of the gate. I'm wondering if you might just provide a little bit of guidance. Where would you recommend is the best place to start to get credibility, to get support, to get confidence? Maybe for our listeners, confidence for themselves that this is a viable area for them to invest their time, energy, and intention to, but also to be able to champion it inside of their organization and to bring the advantages to bear to possibly a highly skeptical and certainly highly regulated environment. Where would you recommend as a place to start?
Yeah, the how to start? It's a fantastic question. The first thought that comes to mind is I do a lot of work with Dataiku. I host their executive programs. Their recent study showed that 60% of C-level executives now trust generative AI to some extent, not completely, but this is a huge change from 2 or 3 years ago. So I think one of the first steps that I see when I talk to those executives is literally just using generative AI internally to complement what people are already doing, because really just to trust AI and to get the most out of AI, you really have to use AI. So I think starting small, starting with basic stuff, complementing people understanding regulatory documents, for example, very common use case, certainly for helping craft wording and messaging and emails. But even things like understanding the legal documents that a lot of executives have to deal with all the time as they're going through the legal process. So I think so that's a place to start. I think the crawl, walk, run approach is what I see a lot of executives doing. I think in that use, you also can farm that as a way to identify opportunities to use higher level generative AI. So getting product managers involved in that process of using it and also monitoring the output and the questions that are going into generative AI is a way I've seen high performing product oriented companies farm not the data, but the ideas for what questions people are asking, where it's falling short, and then therefore what opportunities there are to make it better.
Yep, love that. And there's no better way to build confidence for yourself than to use it every day. And it'll start to make you an authority and an expert, which other people will buy into. Let's face it, you're already in a role. I'm talking to our listeners here. You're already in a role where people are trusting in your expertise and your competence. By definition, you're a leader in your space or an aspiring leader in your space. So this is just one more tool in the toolkit that will give you the opportunity to speak from a position of knowledge and personal experience and small steps. Small steps will get you to the prize. But in that vein, Mark, I wonder, before we close, is there one key message that you would like to leave our audience with about the future of Gen AI in capital markets? If so, what is it?
Number one, don't depend on somebody else to tell you about the future, including me. I think it's the most fascinating stuff is right at the edge where companies are partnering with their innovative tech companies, the people writing patents, doing deep research work, but using that work to apply it to business problems. So for practitioners, I would say partner with your vendors. I think, for example, the stuff that KX is doing with temporal similarity search is fantastic. That's innovation that's come from working with customers on the front lines. The vendor is a partner and the customer working together. So I would look to that for the future, which is to forge your own future by working with really smart people that are often in your technology partners. Innovate at the edges is another takeaway slash theme. What I mean by that is to borrow techniques, in particular in the capital markets, because the requirements are so different in terms of the data. So borrow from the edges of other industries, the intelligence industry, even retail, high-tech manufacturing has a lot of streaming, flowing data. Borrow ideas from those other industries.
And let's not forget, hallucinations can be a benefit. You heard it here first. Mark Palmer, thank you so much for sharing your experience and learnings on today's podcast. It was fascinating and so informative learning from you today. Thank you. To our listeners, for more information on KX, please just head over to kx.com. Don't forget to check the show notes. We put further resources, links to resources there on GenAI adoption in capital markets to help you take that first step. We also have a LinkedIn poll. What's the biggest challenge your organization faces in achieving ROI from AI investments? And we're going to reveal the results on our next episode. If you have any questions that you'd like us to answer or topics you'd like us to cover in future episodes, please email the team at podcast@kx.com. Thanks again for joining us today. I look forward to sharing a new episode with you again very soon.